price, as it stands right now, in the last day, has rebounded from a 2-day drop. Really, if you didn't count this small kind of relief day in green, we've been dropping now 1, 2, 3, 4, 5, 6 days. So it has been a bearish week for Bitcoin. How will we respond? Notice that even though it's a little bit below the line that I drew, lines were never made to be exactly perfect, more to give us zones. We are continuing on Bitcoin on the daily chart to set higher lows, and we keep topping out right around the same level right there, around $44,000 to $44,500. This is why it's an ascending triangle. Now, there are some zones here that I was even looking at this morning, and I was like, oh my goodness, I don't know if I even fully understood when I drew them how significant those zones are going to be. Those are just zones I used looking at RSI data and Bollinger Bands. Now, when I go down to the 4-hourly chart, I still think all of these zones are extremely important. So in case you're wondering, we have this zone right here hovering between 40,000 and about 40,500. We had the zone down here hovering around 37.3 and about 38,000. But then again, there's this smaller zone right here at 39,400, 500, somewhere in that region. Why are these significant? Well, when I originally drew these lines, those of you who have been watching the show and following me, I drew these lines when the price was up here. When I started to see the Bitcoin price reject, I figured we were going to reject. I thought that we were going to make one more rally up and touch 46, maybe in this region, right on here. We didn't do that. We ended up falling down. So I said, these are the two sections we need to watch. These were sections that, if we could stay above, would set up hidden bullish divergence, which would make the price rebound and go up. We didn't hold here in this region, this $40,000 region. We ended up falling through. But now that level is still significant, no longer as support, but as resistance. However, we did perfect. I can even go down to the hourly chart. Look at how the price level responded to this lower zone. At first, we bounced off the top of it. Then we made our way down to the middle of it. And now, within yesterday's time frame, we actually ended up coming to the very bottom of it, finding support. Why is this significant? Because look at what the RSI is doing. While the price is slowly setting lower highs and lower lows, the RSI is doing the exact opposite. Higher lows and higher highs. This is simultaneously setting up both bullish and bearish RSI divergence. So that begs the question, which is going to end up winning out? It's the same way on the 4-hourly chart. Look at this happening. The price is moving down to the right, whereas the RSI is moving up and to the right. We have both. I'll go ahead and draw it for you guys, just in case you're wondering what I'm talking about. Our peaks are going up on the RSI. Our peaks are going down on the price action. But in the same breath, our lows are going down. Oop, did not grab my line there. Let me grab that for you guys. Our lows are going down, whereas our lows over here are going up. So what should we be expecting over the next 24 to 78 hours, 72 hours? I'm not doing my 24-hour days correctly. What are we expecting over the next 24 to 72 hours? This is the question that a lot of people are asking. I will go ahead before I answer that question and remind you guys what I really would love to happen, and it's not necessarily what's going to happen. I'm going to stick to this now for a long time until I see the price close above 46,000. I'm going to stick to my guns and say, guys, as much as nobody wants to see it because they're afraid of what their US dollar will look like compared to their Bitcoin holdings, Bitcoin needs to at some point break and actually close a daily candle below 35,000, sitting in the region of 34 to 33. And the reason why is because we've never seen a reversal, save one time, where we didn't have daily bullish or daily bearish RSI divergence. And even though there's a video, if you want to go back and watch it, I want to quickly show you guys what I'm talking about in case any of you are confused as to what I'm referring to. So of course, you guys would call this a reversal. No, this is a daily reversal, but look at our RSI. The RSI peaks go down, whereas the price goes up. This is strong bearish RSI divergence. If we come over here, while this was a little correction, that was not a change in a trend. This was a change in a trend. And sure enough, what do we see? The price levels on the bottoms go down, whereas the RSI goes up. Over here, we see the exact same thing. And then my RSI is so high, you can't even see it right there. As the price continued to go up right here, the RSI goes down. That's bearish divergence. Coming down here all the way to the bottom of this one, this is the one time in the entire history of Bitcoin that we did not set up daily bullish RSI divergence. So see, the RSI bottom on both sides are the same. This is the lowest point in RSI during this trend. Lowest RSI and lowest price. Here's what's significant. And again, I can't say the word, but what happened in this date right here, early of 2020? A lot of you lost jobs. A lot of you went away. We weren't allowed to come outside. That was a black swan event. None of us were ready for, and consequently, look at how quickly the price dropped. But notice right before this section, right here, what do we have? We have a trend reversal, and we have daily bullish RSI divergence. We started to move to the upside before this news. We came back down and almost immediately jumped back up to those exact same levels and started our ascent. Now, I could keep going back in the history and show you even further all these different changes that had the daily bullish or bearish RSI divergence, but my point at this point has been made. Right now, as it stands, I have not seen the price show us a black swan event, and therefore, having the lowest point of the RSI match the lowest point in price in a daily close is not a strong reason for me to believe that we're going to rally. The only reason it would have meant is if after this news had happened and after we had rallied, if we had continued to the upside. But rather, that 46,000 continues to be a strong level of resistance, sending our price back down already once, and I'm expecting a third time. This is a classic example of what the manipulators of the market want to do. They want to give us hopes at the right moments. They want to FUD us out at the right moments so that they can get as much supply as possible. But what they're looking for and what they know is, hey, we can get that price back down below 35,000. We'll go swallow up the supply. We'll get more because Bitcoin is the future. So watch them play with our emotions throughout this chart. Right? This is what we're seeing happen. And again, until I see a close above 46, which could happen due to this ascending triangle, I will remain in the camp of, I think that we need to come below 35 once again. And the longer we put it off, the longer you guys are going to be asking, why is Bitcoin so boring? Why is it not going up? Why are we in a turtle market? So I can't decide when we go below 35,000. I wish I could, but I can't. All I can do is continue to analyze the market every single day and let you guys know what I'm seeing. But I'm telling you, if you're in the camp of saying, no, we need to have a rally, we need to have a rally, we need to have a rally, just know a rally could send us right back up to 44 and then crash all your hopes when we crash back down. So I just want to start by saying that. I know I want to get to Kelly's take here in just a minute, but before I do want to look at, we're going to be making our price predictions for Friday today. And I know a lot of you are probably listening to this saying, Tim, are you bearish? Are you bullish? You'll find out what I think for Friday, but I'll let you know in the long term, I'm still bullish about Bitcoin. The weekly chart is showing us bullish signs. The on-chain metrics is showing us signs. But when I'm looking at the 4-hourly chart, I'm not as certain. And what I'm going to tell you guys about right now, what I see happening on the charts right this second is despite the fact that we are both setting up bullish and bearish divergence on the 4-hourly, what is the most recent trend? The most recent one is the bearish. If I get rid of that bullish, the bottoms of the RSI, the most recent move is a peak, right? So as it stands right now, I am putting the power squarely back into the bears camp. Now, I think that they could make a little rally. I think that they could continue to go up, but that's where this level becomes significant again. This is one we tested with a wick the other day and watched potentially another wick happen today that closes in that strong zone. But unless we can break above it, unless we can break above about 39,600, watch us again fall back down, at least back into this zone, if not lower, continuing this downward trend in price action, but potentially higher RSI. I know that was a lot to throw at you guys. I want to throw it to Kelly. We're going to discuss this a little more in the show. And again, we'll talk even more about it when we discuss the news of this, because that's going to be a big indicator on what price action happens next. But Kelly, I want to hear what you think about the charts, what you're seeing, and if you agree or disagree with my take right there.
I mean, I completely agree with your take. The market is just so indecisive right now. I think there's been a never-ending flow of bullish metrics, so much so that I stopped in a way sharing as much as I was on my Twitter because I think it started getting a little bit confusing as how there could be so much bullish fundamental data, on-chain metrics showing where how smart money was interacting with Bitcoin, exchange net flows, whether it be inflows to exchange or outflows, outflows, of course, being more bullish. It just goes on and on with the number of bullish metrics that have had, a liquid supply, demand, addresses, all new entities. Everything has been so bullish for so long. And just this damper of everything that's going on with we got the CPI data coming out in 2 days, which, by the way, and I think in 9 minutes where I'm at will actually be my birthday. So I'll be 38.
Come on, happy birthday
here in Japan. But I don't know if that counts. I think it should be based on where you're born, right?
Listen, but that's what you do. Is you move over there and you can get it quicker. I will allow you to do it, Kelly.
I'm coming to you guys from the future, you know. So maybe I'll be able to see something in the charts before you guys do, since I am 14 hours into the future. But the point being, with all this, you know, 2 days on March 10th, March 10th, CPI data is coming out. Now, I don't necessarily expect fireworks from that, but what will happen is I think the projected numbers right now are at 7.8, which is 0.3% higher than last month. And if it comes in at 7.8 or below, the markets, I think, will respond very fruitfully from that. If it comes in above that, which, here's the deal. Right now, with everything going on, it's not just about inflation. You know, we still have supply chain issues. We still have just the nature of what's been going on with government spending over the last couple of years. Whether it was right or not, it's not for us to debate here on this channel. But that has had a huge impact on the potential inflation going on with the dollar, and it's kind of sad in that respect. However, separate from that, and something that's actually not directly related to how or why dollars should be or will inflate, we're having this huge geopolitical circus, if you will, happening over in Russia and Ukraine. And I also want to point out, because I've seen a number of people mention this in chat, is that, you know, we are talking a lot about Russia and Ukraine, but there's also wars going on in Yemen. There's also plenty of geopolitical conflicts that are happening. And it's not that it's not that we're not trying to highlight those or highlighting one over the other. It's just different ones are affecting markets in different way. And in respect to Bitcoin and traditional markets, the Russian and Ukrainian conflict is definitely having more of an impact on markets than that one is. And that's not to say one conflict is should have more eyes on it than another. It's just the fact of what's driving this market price right now, and everything going on with Russia, with oil and the sanctions and all these different sorts of things may actually inflate in an actual, like, more temporary way, not related to what's been driving inflation leading up to this. It may make the inflation numbers come in higher than we projected. And those actually could be transitory, but that's we'll have to see about that. But when the numbers come out on March 10th, I do expect to see some price action around that, depending on if it's above or below. Yeah. But then the following week is when we'll get a bigger news story about all this, when we get the FOMC meeting with the Fed, and they determine what the interest rate hike is going to be. And the only other things I could say about that is, and I was going to share my screen, but I can just talk with you guys about it because it's more of a talking point than a headline we want to bring up. But we still have other incredibly bullish fundamental things happening. We got Thailand offering tax exemptions for crypto users. I think they're trying to sort of coordinate them to funnel them onto, I don't want to say favored exchanges from the government, I guess, probably for a little bit of tracking, but tax incentives for crypto users. We got Shake Shack now basically giving Bitcoin as cash rewards. What was some of the other ones? There's been a lot of institutional investment, or I don't want to say a lot. There's been a spike in institutional investment coming in the last week or two, which is a good thing to see, especially in Bitcoin and Ethereum with everything going on in the market. But everything you laid out with the charts, I mean, I could show you my chart, but I'd just be showing people the exact same thing. So yeah. It's just a time. It's a no trade zone. It's a forever DCA zone for sure. If you're a DCAer, which is the best thing any of us could be doing. Yeah. But in terms of trading, just it's time to be patient and let the market show us what direction it's going to take.
I agree. The last thing I'm going to do before we jump into super chats, you know, even Kelly, as you reminded me, I did want to do one more thing. I did not talk about this. This is another potential that we're looking at here develop, and that is an inverse head and shoulders pattern. And so we talked about this a little bit yesterday, but what we saw in the price dip actually might be a cleaner shoulder line.
This is just a regular head and shoulders.
Sorry, did I say inverse? You're right. Head and shoulders. Thank you, Kelly. So what we're talking about right there, if you guys are wondering, head, we have our left shoulder right here, our head. Now, the question was, it would have been the wimpiest little shoulder in the world, but with this low price and a rebound, was this the new neckline? Now, potentially, are we going to see a right shoulder? I don't know why I drew it so big right there, but are we going to see a right shoulder happening right here? And again, if I went back, I wanted to use a clean chart. If I went back to this line right here, looking at this level of resistance, this is a key level. It's not only the top of the shoulder over here, but it's, again, it would set up bearish RSI divergence, sending us back down. But We need to wait for confirmation before we just say, yep, absolutely, Head and Shoulders is confirmed. Even then, we've seen Head and Shoulders and inverse Head and Shoulders not play out. But in case you're wondering, Tim, what would happen if we ended up going to and we actually confirm this Head and Shoulders pattern? And I'm gonna go ahead and draw it for you right here. It kind of backs up a little bit of things we've been talking about. You know, we've had massive Head and Shoulders pattern coming all the way down to 25, 20,000. This one's a little bit smaller, but a breakout of this one would give us a price prediction of about $31,000. This would put us again well below. I don't know if we necessarily need to go that low, but it's something to keep an eye on, that we are at least, if this Head and Shoulders confirms, again, coming back up, the price comes up, comes back down, we could see Bitcoin price come down as far as 31, maybe stay a little bit higher. Head and Shoulders pattern and an inverse Head and Shoulders pattern don't always hit the price exactly on the dot, but give you a zone to be watching for. Could we potentially see a close in the 32 to 33, 34 region? That's a pretty big region, but maybe a wick as far as 31. This is definitely something we want to keep our eyes on moving forward.
Hey, you made it to the end of the video. If you enjoyed this video, you should definitely consider subscribing, because we're trying to help you become financially free in these cryptocurrency markets. And also, consider following us on Twitter @CryptoJeb for more updates on the price of Bitcoin and cryptocurrencies. Peace.